The first question is about a joint product. Simon Limited produces and sells the following products. Products A, B, C, D, E. Units 2,30,000, 20,000, 20,000, and 40,000. Selling price at split of points 14, 13, 8, 10, 14. Selling price after further processing 45, 70, 12, 20. Raw material cost 33 lakhs 90,000. Another manufacturing expenses costing 5 lakhs 47,000. The manufacturing process which are absorbed on the products on the basis of demand. The further processing cost of A, B, C, and E are 12 lakh, 50 lakh, and 50,000, 50,000, and lakh and 50,000 respectively. Fixed cost being 4 lakh 73,000. You are required to prepare the following in respect of the coming year. Statement showing income forecast of the company, assuming that none of the products are to be processed. Further, statement showing income forecast of the company, assuming that A, B, C, and D are to be processed. Further, can you suggest any other production plan whereby the company can maximize its profit? If yes, then submit a statement showing income forecast arising over the adoption of that plan. See, we have before us, how many? So it is question number 1, joint process, and it is split into 5 products. So you have this choice of selling and split off. The other one is that you can process further and you can sell, except the D. All items can be sold after further processing. So either you can sell it at split off or you can sell it after further processing. First question. Statement showing income forecast, assuming that none of the products are processed further. That means they are asking us to prepare an income statement, assuming that all are sold at this point, and how the joint cost has got to be absorbed. That is based on net realizable value. What do you mean by net realizable value? So we are expected to arrive at the selling value at split of point, and the ability to absorb is based on the sale value. More greater the sale value, greater the capacity to absorb. And joint process cost, working number 1 that you have is material, which is costing us 35 lakhs 90,000. Then 5 lakh and 47,000 for others, conversion cost. All that together comes to 41 lakhs and 37,000. So how do we distribute that? So we will take up products A, C, D, and E. In numbers, we have as 200, 25, 20, and 75. In thousands. Selling price at split of point 17, 13, 8, 10, and 13. What is the sale value at split of point? Sale value at split of point is in thousands. It's 200 into 70. 34, 13 into 30. 200, 200, 75 into 40. 1050. 1050 plus 400 plus 390 plus 3400. That comes to 5240. and join cost that you have seen as 4137 shall be distributed as 3400 divided by 5240 into 4137. 3400 divided by 5240 multiplied by 4137. 2684. So further processing cost is not taken up. So now let us just see us how taken up. So at split off point, so further processing cost, that is, we are expected to take up further processing cost because net realizable value would mean, let me tell you, sale value here, further processing cost is incurred. We are expected to find out the sale value minus further processing cost is what they call it as net realizable value. Initially, if I just created wrong impression, I wanted to just correct it at this point of time. 1250, 150, 50 dash and 1. It is not based on sale value at split off point, assuming that they are sold at split off point, but under net realizable value. Net realizable value 3400 minus 1250, 2150, 240, 150, 200, and 900. So plus 240 plus 150 plus 110. That comes to 3640. Join process cost. We have already taken up that 4137. 4137. 2150 divided by 3640. 4137 plus 2150 divided by memory for into 4137. So just get that computation as sorry, I just multiplied it with the wrong number. Sale value at split off point I taken off by mistake. It is 25, 17, sorry, 17, 12 dash means 10 only you have. Was in the diagram I just put. It is 3000 into 17. 100, 3750, 360, 3750 plus 360 plus 250 plus 200 plus 1350. 2910. 2910 divided by 2910. So 1505. Portion the cost comes like this way. So post the separation cost sale value, net realizable value. Portion the cost. When you total up, see here the total is missing. So that is the reason as why I thought I will take up the computation. Net realizable value 5910 and processing cost is 4137. we are expected to distribute based on 3750. Here the computation is just done 3750. Sorry, 3750 divided by 5910 into 4137. It comes to a rounding of you got to do 2625. 360 divided by 5910 into 4137. You just get, you need to round it up 252. Then 250 divided by 5910 into 4137. 175 divided by 250 into 200. That comes to 140 divided by 200 multiplied by 1350. It gives you 945. Now, this is a portion 3750 divided by 5910 divided by 4137. And that is the way we are expected to calculate. Right? And we are expected to find out a statement of income. So we would like to work out in the same table itself. Now, sale value at split off. Because the first part of the question is on to that only. Statement showing income forecast, assuming that none of the products are processed further. So this is only for the purpose of join product cost portion only. But what is your sale value at split off point? So 200 into your selling price is 17. 3400. Then 30 into 30. 390. Next 25 into 8. 200. 20 into 10. 200. 75 into 14. 1050. So sale value is there, joint process cost is there, and profit is the balance. That is what you just find. They have reported separately. 400, 26, 25. What is this? 775. 3,400 and 138. 25, 60, and 105. So all that total comes to 1103. 1103 less fixed cost. Where this fixed cost is given in the problem, they know the fixed cost 470. It is 730. You just find 730 is reported. Sorry. I'm a little not using calculators. So answer for the first part of the question over. Answer for the second part of the question. They are processed further. So, given the second part of the question, we can answer. This is profit for A, profit for B. How do we arrive at the net realizable value from which sale value at split of point, or sorry, the joint process cost can be deducted, because already this sale value is split of point from which further processing cost we have deducted net realizable value from which joint process cost can be deducted. 3750 minus 2625. So how much is that answer? 1125. Now let's just check up as how they have worked. 1125. You just see in one table itself you can finish it off. That is the reason why I thought I will just do with a little bit of computational error. So how this number we have just got 3750 minus 2625. So these two numbers were taken up, and it is 108, and it is 75, and it is 60, and 1950 minus 945, that comes to 405. Now you just find the sum of all that comes to 1773, 473, and it is 1300 as a profit. Correct? Are you understanding? So the best part, ignore that small error that I just committed. So in one table itself, you can finish out the solution for both. There is one more question that they have asked. What was that question? Can you suggest any other production plan whereby the company can maximize its profit? If yes, then submit a statement showing income forecast arising out of adoption of that particular plan. Okay, now from the question itself, we can answer it so easily. See, if I select split of point, it is 17. If I process it further, I am getting 25 rupees. What is the incremental income that you have? Incremental income that we have for 1 unit for A is 8 rupees. And it is, there is no quantity loss. So 1600 is my incremental revenue. What is my further processing cost? Further processing cost is given in the problem as 1250. So I get incremental profit. How much is the incremental profit? I get 350 rupees. Then B, where you just find that is 13 and 17, where it is 4. And quantity is 30. So incremental revenue is 120. What is further processing cost? Further processing cost is 150. So I get negative. So should be processed further? Yes. No. This is the way it should be presented, not the way they have given in the PDF. Next one, look at 8 rupees to 12 rupees, 4 rupees increase in revenue per unit. No quantitative change, 25, so 100. Further processing cost is 50. So incremental profit is 50. So you got to process further. Yes. That you have, there is no further processing cost. So I ignore D and take up E. So where it is 14 and 20. So 6 rupees and it is 75. So it is 450 and further processing cost in this case being 150 and it is 300 and it is yes. So B should not be processed further. So what was the question that they asked? Can you suggest any other production plan? Yes. Whereby the company can maximize its profits? Yes. 30,000 rupees you can improve the profit. If yes, then submit a statement showing income forecast arising out of the adoption of the plan. So once again, we have to do this exercise. So what is that we should do? We can show that computation, no big deal. So products are A, B, C, D, and E. So sale value. A sale value is after further processing. So A's net realizable value straight away I can take up 3750. 3750 net realizable value. Within brackets I am putting the net realizable value. Further processing cost we have taken up. B. I should not be processing it further. So it is 510 only. 510. This is before further processing. C. What is that in the case of C? We are going to do net realizable value 250. In any case, I don't have scope for processing it further. So how much was that? As far as B is concerned, it is 200 by default. How about in the case of E, 1450? Join process cost. This we have already done. So join process cost 2625. 252, 175, then 140, and 945. So you can say contribution. So 3750 minus 2625, 1125, that we have already got it. Yeah, just repeating. A lot of repetitive works that we have. The second one, 138. I'm sorry. Let me just find out. Okay. Right then. Okay. C 75. Then 60. 405. Yes. Fixed cost. 1125 plus 258 plus 75 plus 60 plus 415. 1923. 473. I'll just check up. Okay. Yes. 138 is 138 is. What are the numbers that we have? 390, 252. Excess of sales revenue is 138. Plus 138 plus 75 plus 60 plus 415 comes to 1803 minus 473. That should give you 1330. In the previous table, it was 1300. Now there is a 30 rupees increase that you find. We are not processing it further in the case of B. So can avoid 30 rupees loss. So one moment, I will just check up. So this is not correct. This is 390. I will show you that. Sale value at split of point is 390. 390 only we have to pick up, not 500, because you are not selling it at further processing. So you are selling it at split of point. So thereby there is an increase in the profit to the extent of 30,000. So this is the way we have just completed the first part of the code. Now operating costing, let us just take it up. It's a very nice question, standard question. Now let us just try that. SMC is a public school having 5 buses, each plying in different directions for the transport of its school students. In view of a larger number of students availing of the bus service, the bus works 2 shifts daily, both in the morning and in the afternoon. The buses are garaged in the school. The workload of the students are being so arranged that in the morning, the first trip picks up senior students and the second trip flying an hour picks up the junior students. Similarly, in the afternoon, the first trip takes the junior students and an hour later, the second trip takes the senior students home. The distance traveled by each bus one way is 8 kilometers. The school works 25 days in a month and remains closed for vacation for the months of May, June, and December. Bus fee is hour payable by students for all 12 months in a year. The details of expenses for and for as under driver salary, cleaner salary payable for all the 12 months. This is for a driver. One cleaner is paid for 5 buses. License, insurance requires purchase price, like scrap values, diesel cost, and each bus gives an average mileage of 4 kilometers per liter of diesel. Seating capacity 50. Seating capacity is fully occupied during the year. Students pick up and drop within a range of 4 kilometers of distance from the school are charged half fare, and 50% of the students need to fall in this category. More interest, since the charges are to be based on average cost, you are required to prepare a statement showing the expenses of operating a single and a fleet of 5 buses for an year. What would the average cost per students per month in respect of students coming from a distance of 4 kilometers and from the school, and students coming from a distance beyond 4 kilometers from the school? See, one important thing that you want to understand is that they've given you all the costs. They got to take up for 9 months of operation, but you got to charge for 12 months. So, how we are expected to do here? Per annum purpose, 4,500 per month to be multiplied by 12. For 5, this has got to be multiplied by 5. Carefully, we have got to do. Then we are expected to do the cleaner's salary. He is employed for all the 5 buses. So what we are expected to do is 3,500 into 12, 42,000. Straight away, 42,000 is for all the 5 buses, and that divided by 5 is for 1 bus. Whereas in the case of driver, 4,500 into 12 into 5 is like this. Whereas in the case of cleaner salary, is 3,500 into 12, 42,000 divided by 5 for 1 bus. Rest of the case, as they go and multiply by, you just see the number is the same. Per annum insurance, depreciation per annum, then maintenance, and all that for diesel working, it all depends on the distance that they travel. In the morning, 8, pick up and drop, so 16 for senior, 16 for junior, and in the evening, 32 into 4, 64 kilometers they travel. Practically, what they just do is that these buses will be parked at the 8th kilometer. In the morning, the driver has got to pick it up from there. Whereas in this problem, they have mentioned it very clearly that the buses are to come back to the same place where they have started, that is the college or the school. So practically what they do is that they keep it in isolated places, very close to students' house, and in the morning they operate. So why would they come back to the place of school empty, and you can avoid that fuel charge? This is the way practically they think. But in this problem, they mentioned it so clearly that they got to get back and it will be kept in the garage. It's what they mentioned. I think they have mentioned somewhere. Yes. They mentioned it so clearly there that you can't be asking them to park somewhere and all that. Okay. So that they have mentioned. So therefore, we are expected to take up cost per month, and total cost divided by 12 should give you that, and number of equivalent students. We all know that students who travel within 4 kilometers, when you charge rupee 1, those who are traveling for 8 kilometers, you have got to double. So we have 50 and 50. What is this 50 and 50? 50 50 senior, 50 junior. So in them 50-50 you would be having. So you can say 50 students who travel within 4 kilometers. When you charge one, these people will be charged twice. So 50 and it is 100. So 150 equivalent students they handle. That is what they have mentioned. So for 5 buses into 5. So therefore, those who are charged for 4 kilometers distance, 210. So 210 for them means 420 for those who are traveling beyond 4 kilometers. So diesel cost as how it is computed is based on the 8 round trips, and one round trip is 8 kilometers into 25 days, and they operate for 9 months. So this can be confirmed so easily. So what happens? One way it is 8. So this is what you have for 16 for senior students and another 16 for junior students, and into 2 in the day. So 32 into 2, so 64. 64 kilometers per day into 25 and into 9. So just get that number, 64 into 25 into 9. So 14,400 you just get in a very simple manner. It is only an application of common sense. I would just say that this is a stricter problem. We can proceed to question number 3. This question number 3 is considered to be a really a wonderful problem, but it can be solved easily. Just see, SLS infrastructure built and operates 110 kilometers highway on the basis of built operate transfer for a period of 20 years. A traffic assessment carried out to estimate the traffic flow per day shows the following figures. The type of vehicles that you find on the road being two-wheeler, car, bus, and heavy commercial vehicles. And the estimated cost of the project, everything is given in terms of lakhs. You don't have to compute anything. You have to simply add all this. Total project cost 114495.25. You just don't have to just do anything. Simply take the number, and they have mentioned an estimated cost of 1120 lakhs that to be incurred for administration. So to this, you have to add 1120. On the basis of the vehicle specification, weight, size, time saving, etc., the following weights have just come into being. Say the lowest, you just find. One moment. Calculate the total project cost per day on concession period. So how do we take up per day this much of expenditure? 1144 95.25 1140. You can take up the computation in a very simple manner. So let us just see as how it has just come into our computation. They have repeated the entire thing. You just see 115615.25. I think I just taken wrong. 1120 it is. Okay, so 1156.25. So how is that they work out 25 years? They mentioned it very clearly at the top. So what is the period to which they got to take it up? That is that they mentioned for 25 years they got operate. You can't have a strike. Maybe during COVID times and all that, you may not be having the traffic. Let us assume that we don't have COVID for this computation. So 25 years, 365, you just get so much of lakhs divided by 9125 days. Cost per day is 12 rupees and 67 paisa. Okay, so please also understand that cost per day we are expected to recover at the rate of 15%. Cost per day is 12.67 in terms of lakhs. So 12 lakhs and 67,000 add 15% is going to be 14 lakh 57,050 per day selling price. How how this selling price has got to be distributed is a wonderful calculation. You just see as how they have worked. So we all know that the weight is the lowest had just come here. 44,500 two-wheelers will be running, and their percentage what they given in the problem as 5, 20, 30, and 45. So this is what you find, and we have to charge the least for two-wheelers, and we have to charge the highest in the case of heavy commercial vehicle. If I consider 5% as 1 unit, so how many equivalent units that you have? 4, 6, and 9. This is what they put as a weight there, 1, 4, 6, and 7. So by doing that, you just find the number of such vehicles are coming up. So everything can be expressed in terms of equivalent two-wheeler. You get 76,444, and 76,444 as a denominator with 1457,050 you get for equivalent two-wheeler 19 rupees and 6 paisa. If this is considered for two-wheeler, 4 times is this, and 6 times and 9 times, and that is the way we are getting the toll fee per vehicle. So let me tell you, mark it out as very, very, very important for your examination, but it is very easy. How come? They themselves have given the cost, pick it up, so that you have to add this administration cost, divide that by 9125 days, 365 into 25, you get cost per day. Add to that 15% profit, you get the sale value. Then if every two-wheeler is considered to be 1 unit, then what is it you are expected to do? Then you are expected to take up all equivalent units, and where you just get 76,444. So much of sale value divided by 76,444. What you end up is 19 rupees and 6 paisa per two-wheeler. So you all know, based on their equivalent units, you just find 4 times the charge, 6 times the charge, and 9 times the charge. And that is a way you arrive at the charge per car and bus and LCV and heavy commercial vehicle. So let me rate of all the problems that we are just going to see or we have seen. Problem number 3, this problem I consider as the best problem. Mark it out, take it from me, and let me also tell you, out of my predictions that you have just seen in the past 30 plus years when I take class, whatever we have just done as prediction, I will just come through. I am not an astrologer, but I can tell for sure that this will catch the eyes of the paper setter. Question number 4, the following are the cost data for 3 alternative ways of processing clerical work for cases brought before LC court system: manual, semi-automatic, and fully automatic. So your monthly fixed occupancy, maintenance cost, and equipment fees they have given, and variable cost for supplies and labor they have provided, and we are expected to calculate indifference points and interpret the results. If the present case load is 600 pages and is expected to go up to 850 in the near future, select the most appropriate system on cost consideration basis for me. So I would just communicate briefly about what exactly is this question. We have something called as indifference point, where we say the formula is change in fixed cost divided by change in variable cost per unit, or change in fixed cost divided by change in contribution per unit. So this is the one that you have. Change in fixed cost divided by change in variable cost, or change in fixed cost divided by change in contribution per unit. Look at this question. You have 15,000 as the fixed cost. In this case, you have 45,000, and in this case, 1,20,000. See, a comparison you can always make between A versus B, A versus C, B versus C. You can do 3 such comparison. So when you do that, this comes to 45, this is 15. So it is 45 minus 15. Incremental fixed cost is 30. A versus C, this is 15,000, this is 1,25,000. So 1,10,000 is the difference in fixed cost. B versus C, 45 and 125. 45 and 125 is 80 there. Correct. So, and what is your variable cost? Variable cost in this case 240, 140, and 40. So change in fixed cost 240 and 140, 100. So divided by 100. So this is in terms of thousands. Okay, 30,000 divided by 100. So answer is 300. So lakh and 10,000 divided by. So here it is 240, here it is 40, it is 200. So it is 550. Then B versus C. So 80,000 divided by B versus C, 140 and 40. So this 100 there. So this 800. So what is the sort of answer that you are going to give? So when it is less than or equal to 300, choose A. When it is more than 300 but less than or equal to 550, you select the one which is costlier, so that being C. When it is between, so when it is between 300, just find out how they have just from less than 300. Oh, that's right. So less than 300 but more than 800. So you have to select C. Right? Sorry, B. So, when it is more than 800, you have to select C. Presently, they got a load of, or I will put it like this one: 0 to 300 A, 301 to 800 B, more than 800 C. Correct. Here they are asking this case is likely to be 850. That means select C. This is what you can consider as the answer. Alternative C is the best. All of us take up question number 5. So, Krishna Limited manufactures 3 different products, and the following information has been collected from the books of accounts. Sales mix 40, 35, 25. Selling price 300, 400, and 200. Variable cost 150, 200, and 120. Total fixed cost 18 lakhs. Total sales 60 lakhs. The company has currently under discussion a proposal to discontinue the manufacture of C and replace it with E, and the following results are anticipated. Actually, it should be A, B, E, and not C. So 45, 35, and 25. And this fixed cost is going to be the same, but the revenue will continue to be at the same 60 lakhs, but in a different combination. So calculate the total contribution to sales ratio and present break-even for existing mix. So how do we make a presentation for the last problem? So A, B, and C. What are their selling prices? 300, 400, 200. 300, 400, and 200. Then variable cost 150, 150, 200, and 120. So it is 150, 200, and 80. So this is contribution. What is the PV ratio? 50%, 50%, and 40%. Sales mix is 40, 35, 25. 40, 35. So now composite PV ratio. So 50% on 40 is 20. 50% on this 17.5. 40% on 25 is 10. Totally, it comes to 47.5%. So this is in terms of percentage only. Now you have the sales information of 60 lakhs. What will be your contribution? Sales into PV ratio is equal to contribution. 60 lakhs 0.475. That gives you 28 lakhs and 50,000. Right. Then fixed cost, which they have mentioned it as 18 lakhs. 18 lakhs. And what you get is 10 lakhs and 50,000 as a profit. This is for the existing one. Okay. Now, let us just take up the B portion. So, what is that B portion? B portion is about products A, B, and E, not C. So, this is 300, 400. For E, we will pick it up is 300. Our variable cost, selling price, variable cost. Selling price, variable cost. 150, 200. What is the variable cost for them? This 150. So your contribution per unit is 150, 200, 150. Take up the PV ratio, 50%, 50%, also 50%. Now, sales mix. What is the sales mix in percentage? 45, 35, 20. 45, 25, and 30. Correct? 45, 30, and sorry. 45, 30, 25. So, composite PV ratio. So 50% on this 22.5. 50% on 30 is 15. 50% on this 12.5. So how much it comes to? It comes to 50%. When all is 50%, PV ratio is also 50%. Sales 60 lakhs. Contribution 30 lakhs. There is a jump in the contribution by 1.5 lakhs. Fixed cost 18 lakhs. Profit is 1 lakhs. So you just find profit is 14 lakhs. So 64 lakhs. Sales, I think they just given same figure. So please understand there is a wrong input in the question itself. So you just find 60 lakhs only. And here we are computing on 64 lakhs. That's not correct. That is either the question should be right or the question should be right and answer is wrong. Or if answer is right, question should be wrong. So I would like to retain the question. But look into other requirements of the question. Calculate total contribution to sales ratio and break-even point. We will take it up separately. So, what is your break-even point in the first case? Break-even point is equal to fixed cost divided by the ratio. 18 lakhs divided by 37.5 lakhs. Now let us take the computation. 18 lakhs divided by 0.475. So that should give you the number as 37 lakhs 89,474. In this case, break-even point is equal to 18 lakhs divided by 50%, which is equal to 36 lakhs. So, what are the points or which product mix has got to be accepted? Which product mix has got to be accepted? So, product mix 2 has got to be accepted. Reason for higher profit and for lower break-even point. What are the reasons? Higher profit and lower break-even points. So, these are the points which are in favor of the second one than the first one. So, you find that there is a problem with the input. So, 36 lakhs is what we are just getting, no problem. We just see proposed sales mix, contribution sales ratio. So, 10 lakh 50 to 14 lakh is what they are saying, whereas it is 12 lakhs for us. And it should be accepted for this is what they are telling. But I am just telling a lower breaking point, and one more thing, better PV ratio. Better PV ratio. So there are 3 points which are in favor of selecting the second alternative. Is that clear?